Welcome to the stock workout where we flex on the market to make gains. In this video we're going to be talking about Luokung Technology Corporation, ticker symbol LKCO. Now this stock has completely gone against the grain this week and there has been a massive run up in the price. So I'm going to go over a bit of news that affects the company and news that the company has released, and we're going to take a look at the charts. But before we take a look at the charts, I want to go through the overall market trend that has been going on this week. So we're going to take a look at the NASDAQ Composite and the 10-year bond yield. So Luokung Technology Corporation, it's a graphic data processing technology company which engages in the provision of interactive location-based services. So in a nutshell, this is a mapping company, and some of the news they released on their acquisition just shows how far this company can potentially go. So we'll take a look at the charts and I'll give you some support and resistance levels, some profit taking levels. But before we do that, if we take a look at the broader market and the 10-year bond yield, if we take a look at the NASDAQ Composite, we can see that we ended the week at 13,215 points. At the beginning of the week, we opened around 13,330 points. So we were down about 95 points. We saw the NASDAQ pick up twice in the week. This was Wednesday over here, Wednesday 17th of March, and we were waiting for the Fed to give their presentation to let us know what is expected from the US economy and what the growth is going to be. They gave us all the numbers then and we saw it pick up. However, we did see it sell off once again. This sell-off would have been attributed to the 10-year bond yields. It came down quite low, down to about here, 13,035 points, and then we did pick up by 99 points again, which is a good indication. We were up 0.76% on the NASDAQ when we ended on Friday. That was just for the day. Overall on the week we were down slightly. If I just draw a quick info line, we could see that when we opened on Monday up until closing on Friday, we were down about 115 points. So we were down 115 points for the week. So that was that. But when we were on the lows on Friday, we were down around 290 points. So we did recover slightly, which is a good indication. This sell-off has been attributed to the 10-year bond yields, and I'll get onto that in a second. If we take a look at the last 6 months of the NASDAQ, this is the general trend and the general overall picture that you can see. So previously there have been dips. Now these would have been when there's a sell-off in the market like there is here. So if you take a look from the peak there to the low point there, it was down around 1,100 points. Came down about 9.4%. Now any sell-off of 10% is considered a correction. Anything over 20% is considered a bear market. So when we take a look at this sell-off that's happened more recently, you can see that from this peak here to this low here, we were down about 12.5%. So at that point, we were in a correction territory. That was down here. And then when we move up to here, if I just swing that across, when we closed on Friday, since the previous high, we're down about 6.5%. So we're not currently in correction territory anymore, but a lot of stocks have been hit hard. Now this has been linked with the 10-year bond yield. So if I flip over to the 10-year bond yield, you can see this is it. So in the last week, if I pull up the 5-day chart, so when we opened, we were around here, 1.63%. When we closed on Friday, we were up to 1.71%. On Friday, it did come down slightly by 0.18%, but for the week we are overall quite up. It did shoot up quite quickly, and that is reflective in this sell-off that's been going on in this last week. If I switch back to the 5-day chart, as the bond yields came down, we saw the NASDAQ pick back up, and as the bond yields picked up and increased, we saw the NASDAQ sell off and literally crater. A lot of stocks did crater. Penny stocks are always hit harder than your big caps. So as I've drawn this trend line here, overall the NASDAQ was down by about 0.8% for the week. So that is the fourth negative week the NASDAQ has had overall out of the past 5 weeks. So you know, it's a bit of a mixed bag, but overall I do believe we are on the up, because if you switch now to the 3-monthly chart, you can see that we're quite up from the previous lows, and hopefully we are going to carry on. Oh, let's just close that. We are going to carry on picking up. Now, for those of you who don't know, the Fed said that it upgraded its 2021 GDP growth forecast to 6.5%, and that's the largest increase that we've seen estimated since 1984. It also said it expects unemployment to drop, which is a good thing, and that is bullish for stocks. Now, from the Fed's presentation, they have indicated that and said that with their policies, you know, they've created a perfect opportunity for companies to and the economy to continue growing, and that is the bullish stance for it. Now, the bearish stance for stocks specifically is basically to do with the 10-year bond yields. However, I do think this is slightly overstretched and a little bit unfair that tech stocks have been hit so hard. We've seen a rotation of money. We've seen hedge funds moving the money out of tech stocks into sort of banking stocks, which is why you did see the S&P hit new records and hit new highs on consecutive days. Now, one of the bearish scenarios for stocks is that if the 10-year bond yield does carry on climbing, and if it hits 2.5%, if it goes up and carries on climbing and sort of hits that 2.5% mark, bonds may start becoming more attractive instead of stocks from a returns perspective. Now, those are not my own words. Those were from a manager survey from the Bank of America. This is what they said, that at 2.5%, bonds may start becoming more attractive instead of stocks, because you've got to realize as well, a lot of the bonds are purchased from other countries, other banks, other institutions in outside of the US, and from foreigners. A lot of the Japanese people do buy government bonds, US government bonds, because the US government bonds are better than their own Japanese government bonds. So the higher the rate, the more attractive it is to people, and that's when you'll see people with deep pockets moving money out of stocks into the government bonds. Also, on the flip side, if there's not enough demand for the government bonds, you will see that the yield will increase to attract new buyers. However, when we did see the last auction for the government bonds, they went through without a hitch. So I think that this is just an overreaction to bond yields rising, and this is the reason why. If we go back, if we go back sort of on the 5-yearly chart, as you can see here, the yields were sort of around 3%. And at 3% back in November 18, you know, markets were still doing good, stocks were still doing good. Recently, we have seen the yields increase, and they've been increasing quite rapidly as well. However, I don't think it constitutes to there being a need to have a huge sell-off on the stocks. I don't think that the NASDAQ needed to be hit as hard as it has been. However, that's the case. This is now the yearly chart that I've got the NASDAQ Composite Index up, and you do sort of see it come down. I haven't measured this yet, so I don't know if this is a full-on correction, but it may be. It fluctuates. This one, so the NASDAQ did come down to its 100 day moving average. It's bounced back up to its 50. It's close to its 50-day moving average now. So this provided a good buying opportunity for anyone that wants to hold stocks long term. Now just to finish off talking about the NASDAQ Composite and the 10-year bond yields, you can do a side-by-side comparison. I've got the 5-day chart up. This is the 5-day chart of the NASDAQ, and this is the 5-day chart of the 10-year bond yield. As you can see, later on in the second half of the week, as you do see, the 10-year bond yield does start to increase. When you flip back over to the NASDAQ Composite, you see the NASDAQ Composite start to drop. So there's inversely related, and NASDAQ has been hit quite hard due to these bond yields. However, I do think it's an overreaction. The economy is set to grow 6.5%, which is amazing given the conditions with the whole pandemic. So this is also something to take into consideration with your stocks. If you are in the minus, you just take this into consideration. So back to Luokung Technology. If we go through a bit of news, first of all, so we've got this article from the Motley Fool. It says why Luokung Technology stock soared today. Now this did come out a few days ago, but this will give an overall picture for this stock. So the stock was supposed to be delisted from the NASDAQ. They've been accused of providing aid to the Chinese military. Then we did see a huge sell-off after that news came out. So what happened this week? So another company which was also supposed to be delisted, I think is pronounced Xiaomi, they actually won their case and they are now not going to be delisted. Also, Luokung said that it received a letter from the Treasury Department saying that any restrictions on the stock would not take effect until May the 8th. So that's a delay from March the 15th. That gives them close to 2 months to win their case, just like Xiaomi did. And I think a lot of investors were happy to see that if Xiaomi could you know, win their case and not be delisted, then Luokung has a good chance as well. So the article then goes on to say that it's a penny stock. It tends to be volatile even under ordinary circumstances. And then the stock soared in February on news that it was gaining exposure to the fast-growing EV industry, as its acquisition candidate, which is EMAPGO Technologies, announced that it would partner with an EV maker, Beijing New Energy Automobile. So that was some news that came out. Luokung getting the extension is a good thing. If they can win their case like Xiaomi did, then you know you're 100% going to see this stock rocket once again. But you do have to keep an eye on the news for that, because any changes in the news for their supposed delisting, that's going to massively affect the stock price. So you know, be aware of that, and be aware of the fact that any news that comes out will cause a lot of volatility in this stock. Then later on in the week, Luokung Technology, they released another statement. So this article here was released on March the 18th. It says shares of Luokung Technology were gaining today after the Chinese mapping technology company said it closed on its previously announced acquisition of EMAPGO Technologies. That's a provider of navigation and electronic mapping services. So the stock closed 20% up on that news. So further down the article, it says that their acquisition had attracted attention because it increased the company's exposure to electric vehicles, a sector that has been surging growth as investors bet on a future where EVs are mainstream. So this is a quick statement that the CEO said. He said that this is a significant milestone in the company's history, as we have created one company with technologies and a product portfolio that will provide us with a clear competitive advantage in the fields of autonomous driving, smart electric vehicles, intelligent transportation and smart cities, enabling us to accelerate our development in this industry while being accretive to Luokung's financials. Now, this is something to take note of. EMAP-Go holds approximately 24% of the Chinese auto market's share of in-dash navigation. That's a huge share, guys. EMAP-Go holds a large proportion of the market. So where do you think Luokung's going to go next? As long as this company can hold off that NASDAQ listing, you know, sky's the limit with this one, because it is a very, very cheap stock. It has a low market cap and it's got a massive share of the Chinese auto market's share of in-dash navigation. As we also know, some companies, for example NIO, are planning to enter the European and the American markets. So as long as EMAP-Go can strike a lot of deals with Chinese car manufacturers and even other car manufacturers, you know, their market share, not only in China, in the rest of the world, will also increase. As you know, all of these EV vehicles and autonomous driving vehicles, they do need high quality mapping technology for them to drive by themselves. Even on normal cars, you have in-car navigation as well. So, you know, I think this is a great company, Luokung. I think they're going on to do great things as long as they can hold off that NASDAQ delisting. So, if we take a look at the charts, we can see that from the 15th, if I just draw a quick info line, from Monday up until sort of Friday pre-market, we saw the price over double. It went up by 116%. So it went from around $1.04 all the way up to $2.25 on Friday closing. If we take that price there, so it closed at 189 and then after hours it dropped down to 183. So if I drop it at 183, right, that's that. It went up by 76%. That's 76% gains in 5 days, 1 week, due to this news that Luokung released and the fact that Xiaomi were able to hold off their NASDAQ delisting, which investors think Luokung might be able to do the same thing, and I hope that they will be able to. Now, if I zoom out a little bit on this stock, if I go to the 3 monthly chart, so this is what has been going on. We saw the price run up from around this 60-cent range all the way to highs of $3.85, and we saw it came tumbling down after that. Now, as I've already said, a lot of this may have been due to the broader market conditions with the NASDAQ, with the sell-off on technology companies. So you can see the price has been tumbling in the last few weeks. Obviously, the notification of them being delisted as well, I guess that didn't help their cause. So if I draw a fib retracement, I'll show you something here. If we draw a fib retracement from the bottom of the run up to the top of the run up, if I drop it there, we can see they literally retraced 100%. So from 60 cents they ran up to $3.85 and came back down to around, what's that, 69 cents, 68 cents, they hit a low. So they pretty much retraced a full 100% from their run up. Now that's not something that you do want to see, but that is the case. Now that did happen a few weeks ago, and since then it has been steadily climbing. This run up here, I believe it was too far too soon, so you would see a harsh retracement. You don't expect it to be 100%, but given the market conditions and given the fact that they were potentially are going to be delisted, it did come crashing right back down. But where are we at the minute? Currently we are sat at the 61% Fibonacci retracement. As I've already mentioned before, this is the golden level of retracement. We did retrace harder than that, and now we have bounced back up. We have been sat at this 61% Fibonacci retracement for around half of this week. More like 2 days, I would say. We did dip below it twice, but as you can see here, if I go back onto the 5-day chart, we did gap up. So in the beginning of the week on Monday pre-market, we did gap up from $1.05, and it went straight up to $1.47. Then we opened at $1.31. So we gapped up there. So a lot of these gains are attributed to this week alone. And at the end of the week, we are sat at the 61% Fibonacci retracement. So the 61% Fib retracement is at $1.84, and we closed at $1.89. After hours, we dropped down to $1.83. So we are a hairline below the Fib retracement, not something to worry about at all, in my opinion. So we are literally sat at the support level. So our first level of support would be this $1.84, as I've marked here. Yeah, that would also act like sort of the next hurdle that we do need to break as well, because the next support below that is down here at $1.30. So that is our next level of support after this. First level resistance sits at $2.23. So if I put that on the chart there, and then the next one is at $2.61. So I've marked them points on the chart there. Also, one other thing to take note of, if I just get rid of this Fib retracement, is the fact that the 21-day EMA has crossed over the 50-day, 100-day and 200-day moving averages. So that is a very bullish indication. You know, RSI has been in the overbought territory. Anything over 70 is overbought, anything under 30 is oversold. So we did retrace slightly, as you can see here. It did touch that $2.23 point and then did retrace back down to $1.83. Some people would have been taking profit. That might be why. It did run up really fast, nearly 100%, over 100% gains just in this week from the low to the high. So there are your two. So one of it is a basic support and resistance level we're sat at there, so we do need to break above that. We closed above that, which I think is a good indication. So you know, next Monday when you wake up, just make sure that we do open above that. Your next level of support after that is down here at the $1.30 range. First point of resistance, as I said, $2.23 and then $2.61. Now, for those of you who have been holding this for a while, I'm also going to give you your first level of profit taking, where profits should be taken. I'm going to do this using the Fibonacci extension tool. So I've drawn that Fib extension now, but before I speak about it, I do want to say, after a retracement of 100% on this stock, I would take these profit levels with a grain of salt, because I do believe it can run higher. Use this as a guide, however, as you've already know the support and resistance levels. So if it doesn't hold that, if it breaks that, you might want to take a bit of cream off the top. Now, using the retracement and the extension tool at the same time, using different tools to analyze stock, is called Confluence. You should always do that, because you would get a better overall picture of where the stock is going, where it's moving, where to take profits, and where it would retrace to. There's many different tools you can use. So currently the stock is sat at $1.83, and your 38% extension is at $1.92. So that would be one of the first profit taking points. Your next profit taking point would be at the 50% extension, and that is at $2.30. The one after that is the 61.8% extension, and that is at $2.68. Now, you don't have to take all the profits, because I do believe this stock can grow a lot more. However, this is an indication of where the profit targets are, so maybe it might be worth taking out your initial investment, because this stock can be very volatile, as with any other stock, any other penny stock, I should say. And given the market conditions that I've already mentioned, you do want to take out your initial investment so that you don't lose money. So there you have it. There you have your support levels at $1.84 is this first support slash resistance level. We do need to hold above that. That's the level we're at right now. Next support level is at $1.30. One of the profit levels, the first profit taking level, is the 38.2% extension at $1.92. The next one is the 50% extension at $2.30, and the one after is the 61.8% extension at $2.68. Now, as a lot of you may already notice, all of these profit levels are really similar to the retracement support and resistance levels. So that's what you call Confluence, using different tools to analyze a stock. Now, to answer the question, can this stock reach $50? $50 is a huge prediction to make. I've been seeing this a lot online. For those that say it can do, they have their reasons for, and for those that say it can't, they have their reasons against. Now, I'm not going to give a direct answer to this. However, I am going to tell you to consider a few things. So the market cap of Luokung Technology, if we take a look at Google, the market cap for this stock is sat at $600 million. Now, if we take a look at another two companies, two of the probably the biggest names in mapping technology, the first being TomTom, they have a market cap of $1.02 billion. Then if we take a look at Garmin, which is another mapping technology, this is at $24 billion. So there is a huge difference in these market caps for these companies, and you do have to consider everything at the same time. With Luokung purchasing and acquiring that company that has around 25% market share for mapping technology in China, that's huge. The Chinese market for vehicles and EVs is one of the biggest, and it's set to grow at an unprecedented rate. So it all really depends on how many deals and how much sort of sales that Luokung can make. $50 is not going to be a near-term price point. For those of you that say, oh, $50, it's going to reach there at some point, we're not talking about the immediate effects. $50 may be achievable in the near future. However, if you do the maths and you times it up, for this stock to be $50, I'll just quickly do the calculation. So after calculating this, I'm getting a market cap of $9.7 billion. Currently the market cap sits at 600 million. So 9.7 billion is a long way off. It may be possible. I wouldn't write it off at all. I think in the future, you know, like a lot of stocks, when you buy and hold them for a few years, say in the future, you might turn around and think this was one of the greatest investments you made in your life. However, you know, TomTom is a bigger company, is a huge company as well. Market cap sits at 1 billion. So 9.7 billion compared to 1. But then again, for the bulls on this stock, Garmin sits at 24 billion. So why can't Luokung hit 9 billion? It's only half the market cap of Garmin. And Luokung having that 25% market share in China, I think it may be achievable. I think with steady growth and good revenue numbers, I think this stock may be able to achieve this in the future, which is why I would say continue holding this stock. This is one of them long-term growth plays. Continue holding this for the future, but at the same time, do keep an eye out to make sure this does not get delisted from the NASDAQ. Otherwise, this stock will crater. This is a growing stock, so it'll be unfair to write this off completely, and I won't write this off completely. I personally am bullish on this. I think this is a brilliant play for everybody who's got in early, who's got in at a low price point. I think this is a brilliant one, and it can continue to grow in the future. And they're carrying on acquiring companies. So they've just acquired one company that has a 24-25% market share in China. That's huge. That's not a small thing. So you do have to look at the bigger picture with this stock. So there you go. That's what I have for you in this video. So if you appreciate that, drop us a like, subscribe to the channel so I can keep bringing you more content. and I'll see you on the next one.